Welcome to Mint. In this edition of From the Newsroom, we are going to discuss about the slowing economy and the dwindling number of GDP. We have with us today Mr. Asit Ranjan Mishra. Welcome to the show, Asit. Asit, we have seen perhaps a GDP growth of a decade low. Was it expected to go down so low?
Not certainly. In fact, everybody, including the policymakers as well as the analysts, were shocked after looking at the numbers. The consensus forecast was around 5.5% of GDP growth this year. The government, the finance ministry was expecting 5.7 to 5.9% of growth. RBI has pared down its growth forecast to 5.5 also. In fact, yesterday only the IMF said the growth will be around 5.4%. So coming at 5%, which is a decade low, as you said, was actually a shocker. So everybody was quite surprised with the numbers actually.
To use economic jargon, and then perhaps the stock market channels are saying every day, has the economy bottomed out? Is there a chance of revival from here on?
Yes, certainly. I think there is almost consensus that the economy has bottomed out. It will not go down from here. But you have to keep in mind that 5% growth this year means in the second half, which is October to March, the economy will grow around 4.6 only. Because 5.4 was the growth rate in the first half. So keeping that aside, obviously the economy, everybody expects and thinks that the economy has bottomed out, but at the same time they are also saying that bottoming out of the economy doesn't mean that the revival will start anytime soon. So that is not a given thing. So more policy measures need to be taken. As you must be knowing, the RBI has already cut policy rates by 25 basis points. And but there is pressure on the part of on the RBI. Obviously, the pressure will be on the part of RBI to cut interest rates further to boost growth. But inflation is already high, so they cannot actually go overboard and cut policy rates to support growth. So those things have to be kept in mind.
2013, from the central government's point of view, perhaps is one of the very interesting year. The year before the election. And the budget is 3 weeks down the line. So how this number is going to impact the FY 13-14 budget?
Yeah. So this number is relied upon to calculate the various fiscal indicators like the fiscal deficit, revenue deficit, everything. And GDP and debt as a percentage of GDP, everything. So apart from that, if a economy is slowing down, that means the revenues the government will receive will also come down significantly. So what they have to do to keep fiscal deficit in check is to cut expenditure. And as you said, it's a pre-election year. So they cannot actually go heavily on expenditure, heavily go for expenditure cuts next year, basically. So that says they are actually in a catch-22 situation. So if they go for expenditure cuts severely, that will again impact growth, which is already weak. So the finance minister will actually have to balance these things very carefully in the budget.
So there is going to be a lot of balance between the populism as well as the economy.
Absolutely, yeah.
Thanks, Asit.
Okay.
That's all we have from the newsroom. Thanks for watching.